Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. It was a day of all-round panic for Indian markets, and benchmark indices today have registered their single biggest drop in last 6 months. There was outright panic in key blue chip stocks. Weak and subdued global cues led to a gap down open, and then markets really never looked up after that. Selling also intensified after railway budget turned out to be a rather no event for Indian markets. Oil and gas stocks led the decline, and metal stocks also took a hard knock. So why exactly are Indian markets correcting ahead of the budget? What are the expectations from tomorrow's eco survey, and is it a good time to put money to work? We'll discuss that and much more for you on this edition of Markets Tomorrow. My show lineup for the day includes Tushar Pradhan, Chief Investment Officer with HSBC AMC, Devesh Kumar, Country Head with CIMB India, and to give us an understanding of how technicals could shape up for Indian markets in the near term, we'll connect with Ashwini Gujral. Gentlemen, good evening to all of you. Thank you for joining us. Ashwini, 5800 is gone. Markets have cracked, and the fall has been rather painful. And there are, and mid-cap stocks have got decimated in last 2 or 3 days. So, what is the next port of call before budget? What do you think we could be staring at?
Well, the market does not seem to be in a bull market anymore now, because the way, large stocks are falling and the kind of support that is coming in at lower levels does not inspire a whole lot of confidence. And we should head towards at least 5600, 5650. But we'll have to see beyond that whether the market goes into a sideways type of mode. It's clearly discounting that, an non-imaginative budget similar to the rail budget will be there, and I don't think the market is building up expectations for great upside. Plus you have global issues now beginning to crop up. So maybe budget will only be a blip and we continue the downtrend even post the budget.
So what has changed for Indian markets? I guess couple of factors. Number one is opinion. Number two, the general feeling is back that Reserve Bank of India may not oblige very soon with a rate cut. Number three, India is massively underperforming other regional markets and other emerging markets. Liquidity often chases performance, so performance is not there. And number four, I guess there is a realization that it will be a while before mid and small cap stocks, they will genuinely bottom out, and the economic recovery or the general earnings recovery for mid and small cap stocks, I think it's a distance away. So I guess there are 3 or 4 factors which were propellers for Indian markets about 6 months ago. Those propellers are now working in the reverse direction. Also globally, risk on trade is clearly getting challenged. Global volatility has shot up. Dollar index is marching toward 82. Yen also has appreciated. So the bottom line here is that everyone is running for cover, and suddenly there is no space to hide. Tushar, looks like Indian markets are getting twisted from all the sides globally. Risk off trade is at play. And if I look at local factors, benchmark indices are looking slightly rusty. Earnings have not surprised on the upside, and Reserve Bank of India now has officially changed their stance.
Yeah, I think there is a definite feeling of gloom, but I think as we discussed earlier, markets usually tend to go through these phases. These are cycles. And if you were to believe that Mr. Market, which is always very paranoid, generally always either feels very euphoric or it feels very depressed. So I think at this time we are looking at a depressive market. But as you mentioned, I think it might be a very interesting time for longer term players. We always think that the prices are always wrong. So when we go to the market, we always complain the prices are too high. But when such an environment arrives, and this is, if you remember, I think the last year, people preferred India equities for the fact that the resilience in earnings, no matter what happens to the world, was something which attracted international investors. I think going forward, with all the measures that we are seeing coming through from the government so far, If this kind of earnings resilience continues into the next year and the year after, and this is not really very huge earnings growth we are talking about, we're just talking about resilient earnings, I think India will continue to remain attractive to the foreigners. So I think this might yet just be a great opportunity for longer term investors to keep looking at India.
Actually, the only silver lining in an otherwise beaten down market is large cap IT, Infosys, TCS. Some of the key large cap IT stocks are moving from strength to strength. So the big question is, will they continue their upward march, or given the kind of environment we are in, it's a matter of time, IT stocks will also cave in?
Well, it should be a matter of time, because who owns these big IT stocks? Generally the same players who are selling the other stocks, which are the FIIs. And if there is a global risk off, then you don't care whether it's an Indian IT stock or a US IT stock, you just take money off. So clearly, these are good levels to book profits on these stocks as well, because chances are if market has to go lower, then some of these heavyweights also have to give up some ground. But it does not have to be tomorrow. You could have a couple of days of sideways action, etc., and then the market uses the budget as a trigger to go down. That's always possible.
What about metals, Ashwini? As a group, metal space have taken a hard whack. Do you think in the near term we could be staring at another 8-10% downside in some of the key metal stocks?
Well, that's easily possible if the big commodity cycle is coming to an end. Then obviously these stocks, they generally tend to go down to a fraction of their highs. And if this is the case, and as we can see in precious metals or copper, etc., everything is coming down. So chances are even metal stocks are coming down, but for great long-term investors, at some point they will become stocks you own, because they are cyclical stocks. They will come back. So, but there could easily be 15-20% still more to go if the Nifty has to fall another 150-200 points.
Let me also bring on board Devesh Kumar. Devesh, good evening to you as well. Thank you for joining us. Devesh, why are Indian markets falling, and how much more do you think they could fall?
Well, in markets, sometimes on anticipation, they run up because of liquidity and both domestic and global movements take place. So far we found that in the beginning of the year, people were adding Indian stocks in portfolio, and the markets were responding to that. At this point of time, as you said, globally some risk weights are being adjusted, and in response to that, in various other markets also there is some reaction. But overall, what we feel is the risk, downward risks are much lower than the risk of upward movement, and Indian market will respond to that. Pre-budget, there could be some amount of nervousness, that also. So I think overall we don't see a big decline from these levels.
Ashwini, for a short trader, what are the key monitorables now? What to your mind could be a good Nifty trade after a 200-point Nifty correction?
Well, if you are a good trader, and then you should be short on the market. That signal had come, if you would remember, about 4 days back, when at 59.50 you gapped down and you kept going down and you had a 100-point decline. If you were short from that day, there's no reason to cover. You hold on to your short positions. In case you are a short-term or day trader type of a trader, then on any rallies now to that 58.40, 58.50 type of zone from where we've fallen today, that would be a good shorting opportunity. I doubt we'll get that, but the next couple of days, if they are sideways, even a sideways day is probably a good enough opportunity for people to go short on the market, because below 58.50, 58.40, a head and shoulders pattern has broken down. which means last 3 months was distribution by large players, and now you can see that the large stocks are coming under the hammer, and there could be easily another 150 points on the downside once this process has started.
Which means you are not ruling out possibility of 5600 or even 5550 on the Nifty.
See, given the kind of stocks which are now falling, Reliance, ONGC, Bajaj Auto, till now the index had not fallen. At 5850 you were down hardly 5%. Now, the kind of stocks which can come down can bring the index down with them much more quickly than earlier, as we've seen from 5900 onwards.
Well, first it was small cap, then it was mid cap, and now large cap stocks are coming under pressure. Typically when markets they reverse, or when strength makes a comeback, first it is large cap, then it is mid cap, and then it is small cap. So small cap stocks unfortunately are the last ones to appreciate, and they are the first ones to fall in. Tushar, come in on large cap IT, because I know you have a significant exposure to large cap IT.
I think the large cap IT space is driven by the events in the US largely, because most of the IT sector is exposed to the US. The housing data and followed by some pretty good economic data coming out of the US has meant that a lot of corporations in the US who anyway are cash rich will not cut IT budgets this year, and there might actually also be a slight increase in discretionary spend. Now that really means pretty positive news for the IT sector in India especially. Also, you have to remember the last year was not a very good year for the bellwether companies except for maybe one or two, and that has to see some sort of reversal. If you look at the resilience in the earnings in this sector, given the fact that there were many fears whether this kind of arbitrage is going to go away, I think that has convinced a lot of people that this is a safe place. But of course, if, as you mentioned, the global gloom starts to envelop the US and the first positive data that we've seen from the US now starts to crumble as well, then this place too will see its own kind of correction. But I think on the whole, I don't believe that budgets get readjusted through the year. So which means that if the positive news from the US continues for a while, I think Indian companies may report yet pretty good profits for this year as well.
Now for some stock ideas for tomorrow morning. For that, Ajay is standing by. Ajay, you've got Kane on your list. I'm not surprised, honestly.
Well, that's correct. The stock has been hammered in line with what the market is actually going through right now. But experts tracking the sector say that it's a good valuation zone the stock is available in, and suggest a buy trade as a positional 2 to 3 day trade. Expectations running high that there would be a custom duty on crude oil imports, which will benefit the company as far as earnings are concerned. And just 2 days back, the official news that the company has started drilling in Rajasthan blocks after a gap of 4 years. So all the positives coming in now, but the negative sentiment in the market has got the stock in a value zone, and so that's a buy. On the short side or on the sell side, Bajaj Auto is the stock which is being discussed. The stock has already started witnessing some liquidation. More could follow according to dealers on the institutional side. Fundamental side, the volumes have been sluggish and the sector is witnessing pressure on the margins, and we also saw fresh build-up of short position in that particular stock, indicating at lower levels in the next few days. So watch out for that particular stock on the downside.
Okay, Ajay, thank you for